When a business grows fast, you pretty quickly realize that one of the biggest bottlenecks, especially in e-commerce, is just logistics. And in Latin America, that's not an easy problem to solve because you've got these regions that have very limited public infrastructure. And at the same time, you have these massive, densely populated mega cities. So it's a pretty complex environment that you have to work in. And for a company of Meli's size, relying on third-party carriers just wasn't a viable long-term solution anymore. You can start that when you just have the business growing and you're at a small scale. But over time, if you want to be the number one shop for people everywhere, basically, you have to be fast wherever you can be. And especially as the business has scaled through the 2010s, they had to make a decision, and that was to build their own logistics network. Once again, basically a copy of what Amazon does. And they call it Mercado NVRs. And over time, that expanded across the entire stack. So we are talking warehousing, fulfillment, sortation, cross-docking, last mile delivery, and eventually even air transport with the launch of Meli Air and its own fleet of airplanes that you can see now here on the screen. And at the end of the day, there are really only two things that matter most for e-commerce companies, and that's, as I said before, pricing and shipping. And Amazon is the company that figured that out early on by being both the cheapest marketplace and the fastest delivery option. That's essentially the model that Meli has managed to replicate in most of the big markets in Latin America.
That's really the first big flywheel you see with these e-commerce giants all over the world, right? Once shipping becomes fast and reliable, e-commerce actually turns into a legitimate alternative for customers and not just some niche use case they might consider occasionally. And then that pulls more people online, which expands the overall market and then attracts more merchants, increases the selection and the diversity of the offerings, and then brings in even more customers. And so all of that in turn just continues to reinforce investment into the underlying logistics network. And because building these logistics networks is incredibly capital intensive and operationally very complex, they do sort of naturally become a barrier to entry. And it's one of the reasons why most regions end up with having their own singular dominant e-commerce player instead of having Amazon simply taking over the entire world or having multiple players really competing with each other equally in the same market.
You can quickly forget that when these companies start out, there aren't that many advantages that you can have over the dozens of competitors that actually try to do the same thing. I mean, it wasn't a new idea that they had at all. And you can imagine in 1999, they weren't the only people coming from the US, having studied there, going to either Argentina, Brazil, or Mexico, and trying to set up a new business. At that stage, you just need a mix of just good execution, obviously, but also just a ton of luck. And as the business grows, that's when you can start doing or differentiating yourself by making better decisions. And logistics is one of the first areas where you can actually build a meaningful edge in this business. Another really important decision that they have done really a perfect choice by is essentially starting a second flywheel, and that was the creation of Mercado Pago. You can think of it as probably the Latin American version of PayPal or Alipay. I mean, it's growing fast, so maybe comparing it to PayPal is not the best idea. It's probably closer to Alipay. And in the early days of Latin American e-commerce, as I said, trust was a huge issue. So people simply didn't feel comfortable transacting online, and sellers were worried that buyers would just receive the product and then initiate chargebacks, so they actually never get paid. And buyers, on the other hand, they didn't trust the product that would actually arrive or that it would match the description. I think I told you and Clay before that the first times I ordered on eBay, my parents were already scared that we would pay for the product, but it would never actually arrive. And as I also said, sometimes they were unfortunately right. On top of that, many of the countries that Meli operated in, they were just still largely cash-based economies. So you just had low debit and credit card penetration. So even if you had the best marketplace and they would want to buy something from you, they simply couldn't. So initially, Mercado Pago was basically just the idea of enabling a secure payment system for the marketplace of Mercado Libre. And that pretty quickly actually turned into this realization that they said, well, this could be much, much bigger. We could become more than just a payment feature and actually become a mix of payments, banks, and just a backbone of the financial structure in Latin America.
We're trying to talk about the business as a whole, and then you have these distinct units with the Mercado Libre side and the Mercado Pago side. And so trying to do that simultaneously, I think is a little complex, even though they go hand in hand. So let's just start with the core Mercado Libre business, the marketplace itself, the logistics, we've already talked about a little bit, and then also this kind of promising advertising business that they're starting to spin up. And then we can look over at the fintech side of things and figure out how it all marries together.
Yeah, whenever you have a company that has either one big flywheel or even multiple flywheels, it's kind of hard to break down just one part of the business and not get lost in this overarching flywheel, just connecting all of them. But maybe before we even do that and go into the individual pieces, it's probably also helpful to just zoom out a bit and get a sense of Meli's overall size. So basically, we are talking about a company that is doing about $25 billion in revenue today. About 60% of that comes from commerce, and the remaining 40% comes from fintech. So it's already a pretty balanced business, at least if you compare that to what most people think, which is basically just a marketplace. What's interesting is that this mix has been fairly stable over the last few years. After the COVID boom, you obviously had the fintech business that outperformed the e-commerce business. But in the last couple of years, growth rates have been about equal on average.
So I said I wanted to talk about the e-commerce side of things, but I do just want to quickly ask, I mean, why did fintech outperform so much in 2022? Is it something to do specifically with the e-commerce boom during lockdowns and COVID? Or I mean, how do you think about all that?
I think the boom in e-commerce has mostly been during 2020 and 2021. And then in 2022, you had this post-COVID slump where the market overall, but especially tech stocks, were sold off because, surprise, surprise, they couldn't grow 50% a year to eternity. And then people started just going out again. And going out again, of course, is not the best if your business model is to be an e-commerce platform. And obviously that meant that growth rates slowed down a bit. But also the fact that fintech took over in that period, where it basically sometimes had quarters growing triple digits, was mostly due to the launch of credit cards in late 2021. So it didn't really have anything to do with the e-commerce business. It was more idiosyncratic. And in the last few years, growth rates have been pretty similar for the fintech and the e-commerce business generally. So that 60-40 split is fairly stable. If I would have to take a guess, I'd probably say fintech is outgrowing e-commerce in the long run, but still, right now it's fairly stable. And what's funny, actually, if you would see that if you look at the graph that we currently have on screen, is that when one business grows slower than usual, the other one actually balances this out. If you know why that could be, please let me know, because I thought about it. And I figured that it has to be idiosyncratic. In my mind, if anything, they should perform well or less well simultaneously. So I guess it's just a coincidence, especially if you have these young businesses like fintech still is. Just onboarding more people to your credit card, for example, can create huge jumps in growth in one quarter, and doesn't necessarily have anything to do with how your e-commerce platform performs. And in terms of geographies, which is probably another important point, Brazil is Meli's biggest market, accounting for about half of overall revenue, followed by Mexico, and then the home market in Argentina, which are about equal in size in the low 20s percentage-wise. And it makes sense if you would look at how much each country in Latin America is contributing to e-commerce in general. Brazil is the biggest market overall.
On geographies, is there a difference between these countries when you compare the commerce side of things versus the fintech side of things? So, for example, is Meli stronger on the commerce or fintech side in the Brazilian market?
There is such a difference. And I would also say that's why the economics vary quite a lot from country to country. So Argentina, for example, which I already said is the home market of Mercado Libre, is a pretty good example of how that mix can change the economics, basically. Meli is the undisputed number one in e-commerce there. But even more importantly, Argentina is by far the most fintech-driven market in the entire ecosystem. If you would compare the percentages of market share in just commerce, for example, between Brazil and Argentina, it's not that different, but the fintech part of the business is a lot different. So to put just some numbers on it, in 2023, about 2/3 of Meli's revenue in Argentina came from Mercado Pago, which is the fintech arm. And compare that to Brazil, where fintech is closer to 40% of revenue, or Mexico, where it's basically the same, but even lower, about 1/3. And that difference in mix shows up very clearly in profitability. Argentina consistently posts what Mercado Libre calls direct contribution margins in the mid-40s, while Brazil and Mexico sit closer to the high teens or the low 20s. And that margin basically answers the question, for every dollar of revenue that Mercado Libre earns in a country, how much is left after covering the direct costs of serving that revenue? So that is the revenue minus all the variable costs involved. And since you looked at Nubank, Sean, you won't be surprised that this fintech business is quite high margin. On the commerce side, incremental revenue tends to come with a lot of variable costs attached. So every additional order comes with fulfillment, warehousing, shipping, and often even subsidies to keep delivery fast and affordable. So even if GMV is growing nicely and the take rates are healthy, which they are, I mentioned before, they are about 20%, which is pretty good for a marketplace like that, a meaningful chunk of those revenues still get eaten up by costs. Fintech, as I said, looks very different, especially in a more mature market like Argentina, where once the payments and the credit infrastructure is in place, the marginal cost of generating yet another peso of fintech revenue is just much lower. So there's very little physical infrastructure involved, and most costs don't scale linearly with volume. So yeah, that's why Argentina, which is much higher in fintech penetration than most other markets it's operating in, consistently delivers the highest contribution margins, and why shifts in the commerce versus fintech's mix have such a big impact on Mercado Libre's reported profitability across all countries they operate in.
And that's what we like so much about a company like Nubank, right? If you look at their cost metrics, you see how much more efficiently run they are versus legacy banks because they have this freshly built digital infrastructure that comes with very few variable costs. Whereas you contrast that with the legacy banking system. I mean, come on, you've got physical branches and thousands of employees manning those branches. And so there's many more variable costs to scaling the business, which just makes those businesses structurally less profitable, right? To serve more customers, you need more branches and you need more people working those branches. Whereas Nubank, it's all software, right? They maybe have an AI assistant and it's an app and it's all downloadable and it's all, very minimal variable costs. So while physical infrastructure in e-commerce is sort of like a moat, it is more of a burden in the modern financial sector because the financial sector has become digitalized. And so when I look at Mercado Libre, you might say that they might have an easier way to acquire new customers than Nubank. And so what worked phenomenally well for Nubank, just for context, has been word of mouth marketing. And so they didn't need to advertise. But at some point, that will probably no longer be the case, especially when it goes from being, their primary market opportunity is acquiring customers who are unbanked to really trying to take customers from other banks. And so Mercado Libre, on the other hand, has its own marketplace in place. And so whenever a customer is checking out, Meli can just quickly chime in with an offer to pay with their own credit card and get cash back or points, or to spread out the payments and whatever it is. And then boom, you've got a new customer acquired into your fintech ecosystem. And then you have a whole funnel that probably moves them from, one credit card to other credit cards to savings accounts and different financial products as they get deeper and deeper into the ecosystem.